Let's get started. And the first story, we are the news, Brandon. So story, we've covered our own blog post because why not? 11fs.com, but this was picked up by a number of places. Building the banking platform of the future with 11fs Foundry. DNB, who is Norway's, also Norway, but Norway, largest financial services group, will be extending its investment into 11fs Foundry and is committed to building new services on the platform with an initial focus on loans. 11fs Foundry offers a modular, ledger-first set of components that deliver secure, digitally native propositions to scale and at speed. And the quote here is, of course, from the group executive for new business at DNB, Rasmus, who says, "Our development teams have actually worked really closely together in the past 6 months, and based on a successful proof of concept, we're now ready to move to the next milestone and the beginning of the stage of implementation. Implementing Foundry in DNB systems will give us valuable insight and better understanding how we can use this technology going forward even more." All right, Brandon, do you have any questions on this one?
Yeah. Well, I think what's been really interesting is we did this through a partnership and not a pure investment play with a lot of VC backing. So I guess my question for you, Simon, is how has that influenced the way that the product's been developed in terms of the roadmap, in terms of the collaboration and the dynamics with DNB?
I think Rasmus really called this. So big shout out to Martin and Trygve at DNB, who leader, Ewan, Arthur, Tom J. The guys will tell you that they're not kidding when they say we've worked together. I mean, this is a daily stand-up. This is being in the office for weeks on end, literally working in the same place, sitting next to each other, looking at lines of code, looking at products, dealing with sprints and backlogs, and actually working hand in hand together, which it kind of breaks the traditional, like a lot of people talk a good game about partnerships, but we're mutually invested for the same outcome. So I think that's been really different, that they're investing in a platform that could become their future, hopefully. So yeah, it's a little bit different. And also starting with a proof of concept and then getting beyond it is absolutely huge for us.
Is that starting small and iterative approach that we always preach about, right?
So I don't know if there's any observations, Loral, Scott, that you have on this from the outside looking in, having worked in partnering with banks and so on.
Yeah, I think it's really interesting, the partnership model, and I'm off to level 39 to try and do exactly some of these types of deals. But I think this is going to be more and more common. We'll see fintechs collaborating with bigger banks, fintechs collaborating with each other, companies in different sectors collaborating on different projects and actually making those investments. So yesterday, as part of London Tech Week, I was at the Innovation Festival, which was focused on large businesses partnering with startups. And it's really key, kind of the process, how to shorten that process, why it's in everyone's best interest to make this happen, because we're going to have amazing products and services at the end of it that we couldn't create on our own. So I think it's really critical and a really good thing.
The thing I love about the story is it kind of reinforces something that I'm very, very keen on, and that's really selling the power of a platform. Something we do internally all the time. We have a platform akin to Foundry in a way, in terms of the way that we deliver digital in the bank is very much the same thing. It's based on a set of underlying microservices and a very much a platform view. And I think all these stories help reinforce why that's really the future of how we need to do these things, right? Because, what most companies, but certainly all financial services companies are looking for is differentiation. Differentiation comes with innovation, but innovation at scale and at pace in a banking environment is quite difficult because there are risky things in play.
And when your services are tightly coupled, it is extremely hard to move quickly, because you don't know, if I push down on one service over here, will these 15 other ones in the corner, would there be like a domino effect of doing change?
But the design pattern is always to try and keep them as separate as you can, right?
Yeah.
So what you're trying to get to is when you have a service that does a payment or a transfer, you turn up to build whatever channel apps you want on top of it, you can rely on that doing that thing, which means that you can move at pace in the upper layers of the architecture, knowing that the lower ones are going to do what they expect to do.
This is McKinsey for a long time have been talking about Lego bricks vastly oversimplifying this concept, but actually true microservices architectures have a number of benefits, like avoiding supplier lock-in and not being reliant on vendor roadmaps. If you are truly partnering and you understand how all of the microservices are being architected right down to the general ledger and all the way back up the stack, then you're in a completely different position to be in control of your own destiny.
Yeah, and I think we had an interview with one of the chief product officers of a large bank a week ago, and he said that when you work for a large organization that has any amount of history or legacy technology, you feel naturally constrained. It's, I want to do this, but to do this, I need to, go back to auto system that might be 10 years old in the mainframe. And when you get a budget, a lot of that budget goes to making compromises, which is because of the system, I can't deliver to exactly what the customer wants, and therefore the compromise I make is on the customer experience. Whereas when you have a platform like the one you described, Scott, it's about compromising, do I want to put this feature out now or later, versus compromising on, do I deliver the right experience for the customer at the end of the day?
It's a better place to be.
Absolutely. We've been able over the last couple of years to really transform all of our channels at pace simply because of the existence of the platform. That's the thing that's enabled it to happen. And that's clearly what were you getting to with this kind of deal, right? Because people will see that when they implement the platform, what they'll be able to do on top of that will be much, much quicker. They'll be able to do a lot more features at pace, but also the quality of the output will be much, much higher. Right, you don't have to go into that kind of scary phase. Software generally doesn't like being new, and what you get is that the new bit is only at the screen, really, and you get the benefit of the aged platform that you can rely on. And that's really important when you're trying to really, really move these things quickly.
What's interesting, though, is increasingly I've seen a lot of headlines about moving to the cloud, migrating existing technology stacks into the cloud, which is sort of taking the shopping basket I had from the 1950s and putting it online, rather than having today's shopping basket online and buying different types of products and services. And increasingly, we have seen, I think, that the cloud vendors tooling, using containerization, using things like Kafka for orchestration, all of this tooling has matured in the last sort of 5 years, where 5 years ago, cloud was a cost save. Instead of virtualizing, I stuck stuff in the cloud. Now there's actually a new way of architecting things that allow you to have 30 versions of your mainframe running, 30 versions of your payment system running, hundreds of versions, so that you've got a massive failover in a way that you wouldn't, and massively more resilience in a way that would have been harder to do in the past. So it's just a different model, but one that maybe we'll see a trend. Here's hoping. All right, next.